Heidi ho, everyone, and welcome aboard. It is nice to have your company as always. I'm getting a bad sound feedback here. Not sure if you guys are witnessing that. I'm hoping that is not the case. Let me turn my camera on. Maybe that'll fix things. Probably won't, but you know, anything's worth a try. It is Thursday. Here we are, the last show of the week, and gee, we could do with a pound breakout, couldn't we? Hasn't been a great week in those terms, it must be said. But in the same breath, you've got to give thanks for what we have got, and we're doing okay in a few trades that we are in. So we'll go through those in the not too distant future. We've got Angel on board. Welcome back, Angel. Angel had a holiday yesterday, or a day off, well earned, I'm sure, after the trading retreat, and I just didn't know. So, Angel, all is well. We get there in the end. It just looks a little bit messier without you there, I've got to say. Righto, let's start thinking about some trade, shall we? I'll start with the breakout trade, and like I said, that's not performing too well this week. We need to have a little bit better than we got so far this week. All good, Angel. The thing is, today, pound has sold off quite substantially against the dollar. I think that's a dollar story more than anything. But yeah, look, dollar yen's going up. I think the euro's come down. Dollar CAD, that's the interesting story. And I think there's a story around that. If you look at dollar CAD not going anywhere, but dollar yen is, dollar Swissy is, pound certainly tumbling against the dollar. Aussie, yeah, Aussie. So I've got an order on the Aussie. I'll give that to you very shortly as well. And the euro tanking against the dollar as well. So there's a story there, in my opinion. The CAD very, very strong in relative terms, and the Aussie not doing so badly as well. We'll investigate that in a little bit. But first up, let's go to the pound breakout trade. And I think we've had two losses and one break even only on my system, and the computer. I'm being the computer at the moment. If you can actually claim anything there, it's had three losses this week. So let's see if we can improve on that. Today's trade, I'll just give you the my version, right? I think we can set the long. Those of you who are in here for the first time, you won't know what we're doing. Of course, we're trying to trade the breakout of the current three bars, which are indeed hourly bars. The current three bars are the preceding three bars to London session. So we're trying to trade the breakout of those three bars. The high of that range of three bars happens to be the high of this candle, which is at 136.107. So we will buy at 136.11. So we just round that up, right? 136.11. And the stop loss will be the low of that candle, rounded down. And if it'll give it to me, maybe I've got to go out of there. Crazy. Never used to be like this. 135.94 will be the stop loss. 1.3594. And TP1 will be worked out on that risk. So 36.11, 34.594 is 17 pips. We'll use half of that. So it'll be 8 pips of TP1. So 3619, 1.3619 will be TP1. TP2 will be double the risk, which, as I said, was 17 pips. So it'll be 34 pips at TP2, which will give us 1.3645. So that's the long of it. We are placing two trades at the same time, guys, a sell and a buy. The sell will be the low of this bar, and the stop loss will be the high of this bar. I think I can put the stop loss in 136.01 will be the stop loss. How far did I go there? There we go. The candles are changed. 136.01, and the entry on that one will be 135.84. 1.3584. Now that will be there. TP1 we can work out. That is now, pardon me, 17 pips is our risk. So a half of that again is 8 pips. So the first take profit level will be at 1.3576. And TP2 will be double the risk. Again, that is 17 pips, so 34 be 1.3550. Okay, let me place those orders. Firstly, the buy. Now, again, guys, those of you who are looking to follow these, absolute nothing. You want no money or no serious money in this at all, because it is not a proven strategy. 135.84 is, sorry, 136.11 is the buy. And the stop loss is 1.3594. Okay, that's the buy sorted. So the sell will be at 1.3584. Once again, a sell stop, 1.3584, and the stop loss will be 1.3601. Okay, so that's sorted. Now, the take profit levels, let's put those on the chart. For the sell, TP1 is 1.3576, so we'll move that down to there. That's our first take profit level. I won't worry with the second one. First take profit level on the buy is 1.3619. Bang on. Okay, let's get rid of that. Cool. Righto. Again, for those of you joining us the first time, this is a test. It is not a proven system or strategy. So you need very much to say, I don't want to put any risk on the table here. Follow it by all means. So just trade in a micro lot. I haven't got a problem with that. But do not put any meaningful money on this until we say go. And that will be after we've gone back and had a look at the results that Ash actually puts in the journal that we are keeping. All right, now the computerized version of this. Now, when I say computerized version of this, our computer programmer, or Actions to Wealth computer programmer, Peter Mitchell, has also been developing a breakout strategy on pound US dollar at the Open of London session. And he's using the last 5 candles on an hourly chart. So 1, 2, 3, 4, 5. So his range today is here and here. Now what he's doing, his entry is 5 pips above the high of the range, and his stop loss is, 3 pips above the range, not 5, and 2 pips below the range for your sell and your stop loss. Stop loss is the same as the entry in the opposite direction, of course. So that's the way he's doing it. As I said, both of us this week are not having a great run of success. But guess what? If you get one that takes you in the right direction and starts to trend, then it only takes that one for the week, and you're looking pretty. We could do with it. We could do with it, absolutely. Righto, now I've got the chat open, so nobody's talking to me. I understand that. What have we got? I've got a few things, and I said I would go with this one first. Aussie dollar. Now, Aussie dollar is interesting to me because it's technically, well, I shouldn't really say technically, I should say slingshotly, if I can put it that way, is pretty much a classic scenario for me. And those of you who don't follow the way I trade, then what I need to do is show you why I think what I think. And here's, where do I start? There's so much evidence to suggest that this is a reasonable risk that I just can't begin to tell you, but I will. So first up, we've got that, which is a descending channel. Now, forget where it's come from, even for now, but just imagine that we are range traders, as we are, and we've got a scenario that's starting to form here. We're going from the top of a range to the bottom of it. Now, I call this a range, right? Anything that repeats off a boundary for me is a range. So this is starting to develop into, well, in fact, it's doing more than starting to develop into that. It's going high to low, low to high. Didn't make it here both times, but bounced off there again. Now it's bounced off there again. Didn't make it to here either, but it has found the bottom again. So logically, I'd be looking for it to bounce at least to the pivots and then maybe back to the top of the channel, because that's the way I do things. G'day, buddy.
Good morning. How are you?
Morning. Yeah, it is.
Always morning somewhere in the world.
I'm okay. I'm just explaining why I consider that the Aussie is a buy at the moment.
Oh, really?
Yeah, because I've got this little descending channel going on. But more than that, from my perspective, I've got, where shall we start? Here, I think we'll start. No, let's not start there. Let's bring it up to the top. You can see it's bounced, but it's come back above that trend line anyway. We'll go to here.
Do you know, mate, I had a good look through the numbers in the Aussie yesterday for Australia, and they still look pretty good. I don't really know.
Nothing wrong with the numbers.
No, there's not. And if you look at the price action, against most of the other currencies, it's either flat or okay. It's not doing too well against the Kiwi, but it's almost like it's a different beast over there, isn't it? But you look against the yen and the Swissy, it's pretty flat, really.
And primed to go, I believe. And don't forget, we've had that $100 billion statement from Philip Lowe earlier in the week on Tuesday that suggested more QE, of course. And on my contest, what is the correct word there? Don't know. I'm contesting anyway. It doesn't mean as much as the market has given it credit for.
Yeah.
Because really everyone's doing it, and not only that, they haven't actually increased their spend. They're keeping exactly the same level.
Yeah.
That is whatever it is, $5 billion a month or whatever. Can't quite a week it is actually, and so there's really nothing's changed there as far as I'm concerned. Yes, it is another big spend, no question, and in Australian terms, that's fairly substantial at $100 billion. We tend to go SH1T ourselves when it gets to that level of debt, but in terms of debt to GDP ratio, we're not doing too bad from a global perspective, if that means anything. But to me, it means that it's ticking along okay.
Yeah, and you know what? The other number that I thought was really interesting was the commodity prices. Commodity prices up 7% since last year, which is massive, and such an economy fueled by commodities. You got to think that that's going to have a positive impact on GDP.
Well, it can't hurt. Certainly can it. And on that basis, you're entitled to think that the Aussie has still got a massive claim to be one of the strongest currencies on the planet right now.
Yeah, I think so.
If not you've got to throw in the Kiwi and the CAD too. And if there's a weakness in the Aussie, I think it's against the CAD. I think the CAD is primed to be the currency.
Yeah, I agree. And this is the thing, isn't it? That this is when you sort of like say, right, I'm not going to trade one commodity currency against another. Because right now, I think commodities is probably the story. People are calling for inflation, and we're likely to see inflation in commodity prices. You know, things like copper. You know, springs to mind straight away, and because of the correlation that these nations and these economies have to the commodities, it's probably not wise to play Aussie CAD or Aussie Kiwi or CAD Kiwi at this particular stage, Kiwi CAD at this particular stage. Better to kind of go, okay, well, we'll you know, what's not going to be affected, and difficult to trade it against the yen if there's going to be a bit of downside coming in the stock market, which there probably will be towards the end of February. So difficult to play against the yen, but you know, against the Swissy, I think might be better. Against the euro would be really good. I think probably right now. Maybe even against the pound, but maybe even some of the exotics. I don't know. You know, maybe even against the Sing dollar. I'm not sure, but yeah, trading it against the Kiwi and the CAD doesn't appear to be a sensible route.
No, I agree. But there was a setup on Aussie CAD earlier, and I'll go through that a little bit later when I do my stuff as well. Although I must remind you guys, I have to be out of here at the top of the hour. I have to be. Got a meeting that I have to be in, so I won't be hanging around too long. So I'm just building this story. So we're bouncing off the bottom rather of this channel. Last month's monthly pivot, so it's a strong-ish level. And we've got a clear false break of that support trend line / trade line. The biggest problem I've got here, well, let me throw in another one. Actually, there's another two. We've got this here. I know it's pretty steep, but it's a classic break and retest of that level. And if you see where price is at the moment, I can also throw in a bit of a horizontal level there as well, where we've had resistance through here, we've had support here. It's broken again, yes, I know, but I wouldn't call it a hard resistance or support level, but I would certainly call it a level. So we've got all of those things at the moment that look to me, there's a little bit of upside for the Aussie. Whether it goes to here or not is another story. But if the dollar comes off, as we expect it will, we don't know when, but if the dollar comes off, then this currency pair stands to just go, where can we go? Pluto, because that's not a planet anymore. We've been through Moon and Saturn with Shukri, but I think we can go to Pluto with this one. No, that's not true. I think we can definitely go to 80, 85 area, and I don't have a problem with that. So it's not my level, my perfect level to trade it. But Ash, you love to do this stuff. You've got a let's say preliminary entry here where we are. Yeah. You've got a secondary entry here where this yellow line is, and maybe there's even a third one here at about that level.
Yeah, the third one I really like.
So if all of those fail, then I'm wrong, right?
Yeah.
But I'm reasonably confident somewhere here we're going to pick up a winner, and this is going to go at some stage. When, I just don't know. So my counsel would be get into this at a very small level, although the setup is absolutely amazing in terms of, slingshot structures. Get into this as a small level, and if it fails, build it from down at those levels that I've chosen from. Now, the problem we've got here from this trade's point of view is the weekly pivot, and it's untested and it's bang in the middle of where I need to take profit. I can't really take profit there. I mean, I can, but it makes the trade in a reward to risk basis ridiculous. So I'll go to there. If we get a bounce off here, we may look a little bit vulnerable, but I'll judge that when we come. Anyway, that's really the one I wanted to go through, mate. I'll give you your space now. There are a couple more that I want to comment on, but that's the trade that I see as potentially the first leg in a buy on Aussie dollar.
Yeah, Angel, that's fine. Subra, I think Subra's okay. I'll just let them in. Sorry,
yeah,
didn't realise you were in. Okay, so a few things that I want to discuss today, mate, and get your opinion on, obviously.
Sure.
And So let's start with the FTSE. I think the FTSE is a little bit weak, a little bit soft. I've just put in a little short, speculative short on the FTSE, and anybody wanting to get in, you'll get the same price as me. But let me give you a little bit of background here, because I'm not really calling this trade. I've taken this trade speculatively at best, really. So as I say, I'm not really suggesting people get into this, and if anything, I would suggest that you probably don't, because I think that there's probably a way to trade, but probably a way that this will need to be traded, and I won't be around to kind of show you exactly what I'm doing, but I may not end up aiming for a lot. I might even come out of the weekly pivot. I've already kind of got a little bit benign on it, and I'll show you what I think is going on, and I'll show you a few things that that I think might be kind of moving things around. But I was looking for a decent move to the downside, but this midday announcement is key really to the day. Now, I thought that we might get a bit of a flush down. There's just a little bit of weakness coming into the US stock market. You know, as we closed up yesterday, the US stock market was just starting to bend a little bit without really breaking. But let's have a look around the grounds to start with. Yesterday, you can see yesterday's bar was just a little bit soft. You know, we are under the weekly pivot. I think this area here as a resistance point is potentially coming into play. Looks like there could be something of a head and shoulders pattern forming here as well. I actually haven't turned my drawing tool on for a few days. Let's put this on. Not that you guys probably need me to draw this. I'm sure you can make it out for yourself. But there's the potential head and shoulders, and it looks like we might get a neckline somewhere along there. It might not be that pattern, but there's just a few other things that are suggesting that, technically speaking, the S&P could be under a bit of pressure here. There's a little trend line going up here as well, and we might well be holding that trend. We're just above that trend line, so I suspect it's under that level, under yesterday's bar. Price action goes under there, then we might well see a downdrift. You know, at least to that. At least to that level down there. So that's the first thing. Now, the fact that we've got the Bank of England out possibly won't move this market. And also, I kind of opened things up this morning, and I'm just kind of looking through the FTSE 100 top few shares here. Unilever had some pretty bad numbers. Now, Unilever's got a probably the biggest market cap. They're down about 4% in the morning. BHP Billiton around about 0.6% higher. Royal Dutch Shell, also some terrible numbers. They're up around about 0.8%. AstraZeneca up 1.2%. HSBC, Rio Tinto, Diageo, Glaxo. Actually, Glaxo's at 1.79%, which is not that surprising. I was going to possibly buy into Glaxo, as they did have a pretty decent support level, but I'll have to have a look at that in a minute. So, but generally speaking, there's no major moves apart from Unilever, which is down 4%. Everything else is either positive or just about positive in the FTSE 100. So I'm not really too hopeful about this trade working out on that much of a longer term, which means I really kind of want to get out now, but I don't think I need to get out just yet. Now, if I go down to the hourly, what I have is this trend line along here, which is just suggesting that this daily pivot may well hold. And as I say, I'm probably just going to try and get to this point down here. I might even come out a little bit earlier. You know, I might just take a bit of profit on this. Maybe move stops to break even. I'm not sure. And if it closes above this level, I'm not going to let it run too much past the monthly pivot. So I guess what I'm saying is that that the trade is not as sound as I was hoping it would be. I thought maybe we would get a drift to the downside straight away. The fact that price action hasn't started to crash, and we're now at 20 past 8, so we're 20 minutes past the open, suggests that we possibly won't. I'm just looking for this daily pivot just to give me some resistance really to get out of the position, but I've got that one on anyway, just for complete transparency. But the thing I really wanted to discuss was silver and gold, because yesterday we were talking about a potential hedge situation where you could buy silver and sell gold, and I think it probably would have worked out as a trade, but not to any huge degree. We are seeing silver held here at the weekly pivot, and we're seeing it held here at the monthly pivot. But gold did crash down a bit yesterday. You know, we were talking about this yesterday at this area here. So if we were to put the level on here, the hedged position currently, gold is down around about $12 from the 18, so around about 0.75%, where it was being called yesterday ish, and silver is currently down probably about the same. It doesn't look like it was much of a. Who's this coming in here? Oh, thanks guys. Lewis has got to go. Is that right?
I can't see that.
Oh, Brian Glaxo. Yes.
You work for Glaxo, Brian?
Yeah. So Glaxo. Interesting though, Brian, wasn't it? What happened to Glaxo yesterday? What was the news on Glaxo yesterday? And we saw a big crash down in the Glaxo price towards the end of trade yesterday. I'm not sure. I can't remember what it was about now. I remember reading the story, but it wasn't. I don't know if you're able to come on mic, Brian, but I'd love to have a chat with you if you are. My thing with Glaxo is I'd quite like to buy it. Quite like the fact that they're a divvy payer as well. They are at a decent level of support on the charts, but I don't see any other buying coming in. That's my issue with Glaxo. I think it's a decent enough price point, a decent enough company as well. They seem fairly solid. I'm not sure whether they're getting hurt a little bit by the fact that they are a bit late to the party with COVID. But you look at yesterday's bar, and it was a big crash down in price. So something was going on. Maybe I should bring up the news just so.
Let me throw you a thought process in there.
Yeah.
If they are late to the party,
yeah,
with the vaccine, maybe they've learned from the mistakes of their predecessors. Well, their opposition, or whatever you want to call it, peers, and maybe they've got or they're going to come up with a product that's 100% effective, and you only need one dose of. I'm grabbing straws out of the air here, right? But maybe that's the case.
I agree with you. I completely agree with you. I don't think you could have a better synopsis than that. I think the fact that they are a bit behind everybody else. Yeah, it could well be that they benefit. The problem is that there's so many competitors in the space that there are probably others that, there's the other argument, I suppose, that while the others have already released theirs to market, they're probably now developing they're probably developing those vaccines even further, particularly with this new strain. So I think there's an argument to be made on both sides. I've just brought up the news on it. So Glaxo expects a mid to high single-digit percentage decline in adjusted earnings per share at constant currencies. This is after adjusted earnings per share fell 6% to 115.9 in 2020, or a 4% decline at constant exchange rate. So it's declaring a fourth quarter dividend of 23p, bringing the total to 80p, whatever. This was flat on 2019. So I suppose it's the lack of growth that was being reacted to. It doesn't, it's not a growth stock, is it? GlaxoSmithKline. It's one of those that you would maybe get into to get the dividend payment, but and it's worth having parked in your portfolio. I would have thought, definitely want some kind of pharmaceutical company. Maybe Glaxo's not the best. We have seen AstraZeneca also retreat a little bit, so maybe that might be playing a part in it. Possibly a more attractive company to purchase. So people are probably thinking about the two. You'd probably go for AstraZeneca with a price point retreating. So but it could be something to do with that. I'm not sure. But anyway, I want to talk to you about this. Now, can I find it? Here we go. Look at this. Now, I thought this was really interesting.
Sorry, mate. Cancelled the buy on the pound. We have been triggered short on the trade, and we're a couple of pips from taking profit.
Oh, I need to get some updated numbers, mate, from that and
We
yesterday
need,
as well.
I think we need to spend a weekend on it.
Yeah, well, no, I've got Monday and Tuesday. It's just yesterday and today. Here we go. Look at this. This is a story on the Guardian. So you can just put in if you want to Google it. U.S. Mint couldn't meet demand for gold and silver coins due to pandemic buying. Sale of bullion rose 258%. And I think this becomes really interesting because why isn't the price of gold going up when the sales of US bullion has risen by so much? And we've got the new year, which means new coins. And they, you know, there's a massive demand for these new coins, but just not enough supply. So this is suggesting that that there could be a huge uptick, I think, in silver in times to come. Now the Reddit crowd are kind of obviously being mentioned in this article as well. But I think more significantly is when we get down to this here, I think it is. Mint has limited window to produce its current gold and silver coins, with redesigned coins expected to debut in the summer. It's limiting distribution of its gold, silver and platinum coins to specific dealers because of heavy demand and a limited number of suppliers of metal, it said in a statement. The silver rally in recent days is just the latest attempt by some traders to persuade more investors to buy up physical gold. They believe large banks are manipulating the silver price. And you know, you can click on that link and that'll take you something else. And that buying up silver will force a shortage and push the prices up. Possibly that might well be the case. That might well be the case. But you know, this is silver. So, okay, those guys might be manipulating the price to try and get the silver price up. But the thing that interested me more was the gold thing, 258%. So I would suggest that looking for a long in gold is coming. It is coming. I don't really know when. And as I said yesterday, the price in gold tends to turn around about March, which means that I'm going to be interested in a gold surge in around about March. But then there's another potential surge around about the summertime. Now we're only a month or so away from that. So if they are manipulating the price, which I hope they are, because that means we could be getting better prices, how long do we need before we start to scale into this? Doesn't look like that long to me. You know, this looks to me, if we get back to this low down here, that looks to me like, now we talked about this level yesterday, but this is starting to look like a potential level. Now it might be just a little bit lower. It might be at this area here, which is going to be around about the 1750 mark. So if this falls south of $1,800 an ounce, then gold has to start becoming a consideration, in my opinion, and I can only really say in my opinion. So in my opinion, I think we're going to get gold moving higher, and it's just about picking these technical levels. You know, from what I can see here. We have to remember that that a lot of the exchanges.
Do you think it is, mate? Is it just technical levels with gold? I'm not a gold trader, as you know, but it occurs to me that fundamentals drive it as well. I could be wrong.
Yeah, well, the fundamentals will ultimately drive it. I suppose what I'm saying is the fundamentals are actually bullish on gold. You know, from most of the things I read, I don't really read too much that suggests that we should be going in the direction we're going in, which I think is fascinating.
You just want to set up to trade is pretty much what you're saying.
Exactly, and that's where, because the thing about the technical aspect of it is, if the banks are manipulating the price of gold, then we know that most exchanges are now run with robots. So what are they doing right now? Well, they're potentially just triggering in all their sell positions, and you know, it's almost like a buy squeeze, if you like, going on. So at what point do those robots say this is support? Because at the minute they're not saying this is support. They're allowing the price to continue to come to the downside, move to the downside. At what point are they saying this is support? Because the fundamentals support the notion that gold should be going in the opposite direction. And I would have thought this is probably the first one. I mean, everything's the first one in a way, but this is probably the first one. But I suspect this is more likely to be the better first one, if that makes sense. And the reason that I say that is because we looked at the seasonality yesterday. There is a slightly benign interest from the commercial, from the commitment of traders. So the commitment of traders they're just not quite there yet. You know, they're not quite as bullish as I'd like them to be at this particular stage. And until they are, I don't think we can really rely on the seasonals. And the seasonals are bullish on gold, but the seasonals really kick in when we kind of get to the kind of March time for initial surge, and then June, July. So I would like to see a stock market coming down at the start towards the end of February, gold starting to level off at the start of March. Buy something there. If it drops again, wait until around about the late spring, and then see if there's another buying opportunity, and kind of double down on it, because I just think that gold's going to be one of the stories.
Yeah, look, don't disagree with you. I think we're still in uncertain times, and for that reason, we've got to expect that there will be people wanting to buy gold. And
yeah,
I'm not one of them yet, but I'm trying to concentrate on bloody cryptos at the moment, for goodness sake.
Yeah,
give me a break.
Day, Lewis.
Hi, Lewis.
Lewis, your name is odd. It says Lewis. I got to go. Thanks, guys. Good morning, Ash. I'm not sure. It's a long surname. Roy, there is also stimulus checks waiting for that news as well. Not sure if I fully understand that. Is that to do with the Biden stimulus? Oh, for gold long. Yeah, I mean, that's the other thing. Oh, John's there. Okay, let's bring John in. There you go, John. Oh, there we go.
Yeah, no, I was just going to comment on the stimulus checks. They might get this stuff through the lower house, but they've got a problem in the Senate. There's a couple of Democrats that aren't keen on these stimulus checks. There's a sticking point. It's
right.
Quite a minute. They've got a bunch of stuff going on. He's signing these orders, but if I like to follow a little bit of the politics there, they've got a bit of a sticking problem in the Senate. So the stimulus checks, everybody wants them, but there's a problem.
Right.
So, that's my answer to the guy there.
I see. Okay.
Problem.
And this is the interesting thing, I suppose, as well. I mean, you know, taking the stimulus and the government out of play, we're back to this kind of worldwide QE that you were talking about, Jeff, where every nation is effectively every central bank is just printing money, devaluing their currency. But this is the thing about these physical products, and I would roll Bitcoin in to that area as well. This is the thing about these physical products, is that they are a store of value. And you only have to look at gold over the period of time to know that it increases in value. So money is devaluing. I should say currency is devaluing. But something like gold is just a place to put your money. Now, I would certainly say that, okay, we are going to try and trade it, of course, but there has to be a consideration to say, does anybody have enough finances at this stage to somehow get involved in the physical product? Now, whether that's with Pax Gold, that I'm hoping that Shukri's going to talk us through next week, or whether that is by buying physical gold. And I have to say, buying physical gold through, some of the exchanges that I've seen, it's just way too expensive. They want 5% before you even break even on the spread. It's just crazy.
That's the world in which we live, mate.
Yeah, but there's better ways to play it, isn't there? You could get it through an ETF. You could get it through, as I said, Pax Gold crypto. If that's a genuine cryptocurrency, I mean, we need to maybe do a bit more due diligence on that. I mean, that's hopefully what Shukri will do for us. But that's something. Or I guess you could trade it and keep the position. Just keep the position, but then you're obviously going to be playing swaps and everything else as well. So. Yeah, or you could also go and get a stock that mines gold, something like Centamin or Polymetal or Fresnillo or Barrick Golds, something like that. So there's a few different ways to play it, but I would suggest that it's better to have something which stores it rather than just purely going in for a trade, if people have the money. And
yes,
this
I
is where
agree.
Sites like Robinhood, I guess, come into play. FTSE 100 has crashed to the upside, has surged, I should say, to the upside. Now, what I'm going to do with this FTSE 100 is just wait a little while longer, because it's gone through this. It's gone through my trend line here, and it looks like it's through the monthly pivot on this chart, but it hasn't gone through the monthly pivot on the futures, and this particular chart is not the best reflection, because it isn't even the proper FTSE. It's not the FTSE or the futures. So I'm going to wait a little while longer and just see if the price comes back down here by the top of the hour, and if it does, then we're all good. If it closes up at this level, then I'm just going to close the position. I'm just going to take that one off. But I'm probably high enough to. Oh, I'm way up. I'm way up on the stop. So I've got a little bit of time on this one anyway. But yeah, that's me for right now, mate. It looks to me like we could have a little bit of toing and froing before the Bank of England statement.
Yeah, I think we're seeing that in currencies, and there's no question there. The dollar is all over the shop like a mad woman's,
Yeah.
It's up.
Shall I quickly get the levels that we got? Now, I missed yesterday. I don't know if you've got those from yesterday, but here, this is what we got so far. What was triggered? What is it today? It's the 4th. Is this from yesterday?
What are we talking about?
The pound trade.
Going
to be too much. Okay, let's do it.
Have to have a look at the recording now.
No worries, mate. Let's do it.
I mean, I can work it out, but that'll take 5 minutes. So don't want to waste everyone's time.
Okay, well, we'll do that maybe over the weekend or something, and see if we can get that. Or maybe if you get the numbers over the weekend, then just post them to me, and I'll.
All right. Yeah, we'll have a chat over the weekend. Sure.
Okay, mate. Okay.
Lots of comments. What do we got?
Thanks for that, John, by the way.
Yeah, no, it's okay. I've been watching gold. Am I right in saying that all the big boys are on the sideline waiting for the best price they can get, and it's like people like me, inexperienced traders, diving in, seeing if they like pulling it high, and then it takes them and it is coming down. It's like the figure that was quoted yesterday. Was it 1834? I sat and watched it last night. I thought, there's no way in the morning it's going to be at 1834. No chance. And in the morning, it had gone down again, isn't it? Yeah. Everybody's waiting for the big money for a good price. Am I wrong? I don't know.
It's at 1820, isn't it?
Yeah, it went down to this morning was 18. I think it hit 1815, something like that. So I just thought, okay, this is just going to keep going down until they think they're going to get a good price.
So straight through Ainsley support level. Interesting.
It was testing that during the week. It kept coming into 34, going up, going back, going up. So I just used it as a learning tool. I thought, I'll watch this and see if I can, like Jeff said, see where all the money is and see what they're doing to people. And it's quite fascinating. I felt a bit sorry for all the people losing money, but hey ho, I wasn't in it.
Yeah, it's just not ready yet, is it? And I guess the thing with gold is that if we can afford to buy an ounce of gold, then we can afford to trade it without leverage. And that would be my personal take on it. It's one of those things that if you've got, let's say $4,000 in your trading account, $5,000 in your trading account, then you go in at $1 an ounce, somewhere around about the 1770 level, which means that you're completely unleveraged at that point. Now, if it falls again, and as long as we believe in this story, but if it falls again, then we go in again, and if it falls again, then we go in finally, probably around about the 1350 level. Now, at that point, what we're saying, what I'd be doing is saying, okay, the first position is unleveraged. Completely unleveraged, but I might have to leverage up a little bit But if you're only using 3 times leverage rather than, you know, what do they offer? What do brokers offer for leverage? 100 times, is it?
Yeah, I think that's...
at least you can get more than that if you want, I think.
Right. Okay. So that doesn't appear to me like the sensible play, because the only way that you want that 100 times leverage is if you are already in profit. You know, if the price has started to move to the upside and you can cover your positions, then you in actual fact, you're not even using the leverage then, are you? You know, you're using the compounding aspect of what you've got on. But if you can get into it at no more than 3 times leverage, but your first position would be unleveraged, completely unleveraged. But I don't think you'd need to completely, you know, halve what you're saying. And now the reason I said if you've got a $5,000 account and you're going in at, you know, around about the, let's say, just for maths, around about the 2,000 level, that is and the other position is starting to get to 2 to 1, is because of the margin that you're going to need in your account. So you want at least 50% of your margin there. So I think that the way to play it is to go in unleveraged, then you can sleep at night, then you don't worry about it. If it starts to pop up and the story starts to unfold that the supply is just not there for the demand, the fiat currencies start to crash, because that's really the bottom line here, isn't it? What we're saying is that if there is no store of value in a fiat currency, then the likelihood that the dollar, the story that the dollar all of a sudden starts to crash and devalues to the point that it's worthless is going to be where we see the things like Bitcoin and gold and silver, and you know the other basket of cryptocurrencies and precious metals start to really increase in value. So at that point we can start saying this story is unfolding in my favor. I'm going in again, and I'm going in again, and I'm going in again. So you know, to my mind, the best way to play it is to not approach it like a trader, but approach it like an investor. Where you are only spending the money you've got initially, and then use the trading, the advantage of leverage through your trading platform only 2 or 3 times, you know, 4 maximum, just to kind of keep yourself safe and see if the price starts moving in your favor, and then start to build into it, you know, rather than doing anything else. And what this means is that we can double down. You know, this is kind of a dollar cost averaging strategy without dollar cost averaging to the point of being broken. You know, you're kind of doubling down, but doubling down with the money that you already have. Ainsley's always watching the 200 EMA a touch on gold. And where is that right now, Helen? Where's the 200 EMA? Let's put it in, shall we? And have a look.
Roy, I've got no thoughts on Chinese New Year, mate. I don't know if you have, Ash.
Oh, what to do with gold? Do you know, mate? No, I don't. Okay, it's right on top of that 200 EMA now. I don't have an opinion on it, if I'm honest, Roy. But I'm sure it must have a factor. I will no doubt have an opinion on it. When I can find something that I can read on it, but I don't. I'm less likely just to form an opinion just because it's Chinese New Year and people say that that there's maybe more demand. I want to read it. I want to know, you know, what is the demand at that time? You know, is there orders coming in for gold that, as we just read, are up, you know, 250 times since Chinese New Year, and there's no supply for it? That's the kind of thing that I want to read. I don't really have an opinion on it just because it's that time of year at this stage, because I don't really know what's going on in China when it comes down to celebrations and everything else. What was that thing from Helen?
Yeah, look, that's a factor, Helen. Of course, COVID's a factor. And, you know, I don't know when I started saying this, but I started saying it earlier in 2020, where I thought that seasonals would be interrupted by COVID-19. And then I said, I think near Christmas time, that I thought 2021 would be a time where seasonals came back into their own. Because because I thought that COVID-19 may be a lesser evil or a lesser impact on the world. I'm not so sure that's the case anymore. I think COVID's still there and still there in abundance.
Well, do you know what though,
Word,
Jeff? The other
Hmm.
aspect of this, no money, no buy is a fair point, Helen. But fear is a much stronger emotion than
Absolutely.
and if people are scared about what might happen to the world, they're going to go and get some gold. So
that drives everything. Fear drives everything.
Yeah, I don't think it will matter. I don't think it will matter that people haven't got any money, because what do you do when you got no money? You go and borrow it. And considering that the levels of borrowing right now, then most people, I would have thought, or not most, probably most people, I would have thought that are in, or are exposed or have an opinion about the investing game, will be able to get their hands on something. Even if they're getting their hands on $500, $1,000, whatever it is. If there's enough fear, then people will start going to buy these asset classes, and they will get the money. I would almost guarantee. And the thing is, you've got things like credit cards, where you can buy stuff on a credit card and on a 0% loan. And then you can switch it, can't you? But this is the truth. You can go and switch it to another 0% loan when that one's about to expire, and you just keep rotating money around. I mean, it's I can see with your head in your hands, Jeff. You think that's a dangerous
because
place.
You take me back to my teens and my 20s when they first introduced those horrid things called credit cards.
Yeah.
And I used to play them amazingly, but then I kept. As I continue to tell you, I kept backing slow horses. And eventually the credit cards max out and you've got a problem.
Do you know what though, mate? I think if you play the game properly with a credit card, they're the best invention. With those 0% things that you could have got, and I'll tell you why.
I'll agree to disagree.
Well, I'll tell you why. If you have got the money to not use the credit card, which means that you're going to pay it off every month, then they give you stuff for free. Every month I've got an Amazon credit card. Every month I get a certain amount of points that I can go and spend on Amazon. Every month, because as long as I kind of reach my thing, and I've had it for about, I don't know how many, maybe 3 years or so, and I've never missed a payment because I know I've got the money that to buy something, but I always get it on my credit card because I know that I'm going to get some kickback. But that's the, and there's not that many people that do it that way, but that's the way to play credit cards, isn't it? It's free stuff.
I used to think that, and
I never collect my free stuff.
Good on you, Helen.
Good morning, Karen. You've got to collect your free stuff.
They give you points, and I've got thousands of points. I just haven't got to look at what I want to buy. They give you a free rice cooker or some deal like that.
It's the wrong credit card.
If you buy a brand new Mercedes, you can buy a pack of handkerchiefs.
Hey, yeah. If they give me a brand new Mercedes, I'm all in.
No, I think Jeff was saying if you buy the Mercedes with the credit card.
For the tissue, no thanks.
Yeah, but that sounds to me like you might have the wrong credit card. Do you shop on Amazon?
I don't have a credit card.
No, I don't want to support Bezos. Just
okay,
go to a local bookstore.
Okay, what about do you buy food?
Yeah.
Well, then get the credit card that links to the supermarket chain that you use. Free food.
Yeah, I also have a medical card that links to the supermarket chain. I get discounts for buying vegetables. Eating healthy.
You're too complicated, Helen. I can't keep up with it.
I mean, the credit card's okay. It's a pretty good one.
Yeah.
It's a platinum card, so I can't complain. What they do is they give you free fees. You don't pay each month.
Yeah.
There's no membership fee. It's free if you spend so much.
Yeah, that's the thing. And also, I mean, you got American Express, even though it's a terrible card because you can't use it anywhere, but they give you cash back. Anyway, we shouldn't go down the credit card.
It's a conversation for another. And look, to be perfect, what the hell was that?
Oh, that was my computer going off on alert for divergence. It's okay.
Oh.
I was going to ask you, what happens to gold when it hits 200 EMA? You think it's going to fly back up or what?
Well, I think that's a really good question, Helen, and that's where we are. So, I hadn't considered the 200 EMA, and now you say that Ainsley uses the 200 EMA. Well, let's have a look at it. Let's have a look at it and see how it reacts to this 200 EMA.
Tends to touch and then go back, but I don't know.
That's the proof in the pudding, isn't it? Look,
there's one there.
Jeff, have you talked to Ainsley today? How is she doing?
Yeah, no, she's fine, Helen. She'll be with us, as I said yesterday, on Wednesdays now as a permanent fixture at what's your time? 5:35.
I was really feeling bad for her because I was stuck in gold trades as well, so I know the feeling.
Yeah, look, paying a little bit back on a big amount's not such a big deal.
Do you know what? Here we go. Now with from what I can see here, I'm just going to change this.
But sometimes it goes further down. After
well, this yeah. So this is it. So it looks to me when it's channeling, if it's channeling like we might be getting into right now, then it doesn't seem to have that good a relation. I mean, it does have a relationship with the 200 EMA, but it can come through, then back again, and then back again. But you can see that there is support. It does like the 200 EMA, so it's got validity there. When it's trending, it seems to really like it. But what's going on right now? I'd say we're in another range. And if we're in another range, then what we've just seen is at least once anyway. We'd have to do a bit more research on it, but at least
it'll
once.
Be support and resistance.
Well, yeah, it's kind of not as, it doesn't look as significant when we're in this rangy kind of atmosphere and environment. So
okay.
We're not trending, but look, because when we're trending, it tends to look here. It seemed to touch it for a short period, and then it goes. Short period here, and then it goes. But right now, it's been meandering here, and now we're getting a bit long in the tooth for the relationship with the 200 EMA. So I wonder whether we are more like a period that we had here, where it kind of goes up and down.
I was just curious that when the Reddit people did their stuff with silver, that it didn't affect gold, because silver goes up, gold goes up.
Yeah, but no, they can't though, Helen. They haven't got the money.
They don't have to buy gold. I mean, when they bought silver, if the trend was following together, like it always does, they go up together and go down together. It didn't affect the gold.
Yeah, but why does the trend go up and down together? It's because the institutions are pushing price, and if the institutions aren't the ones pushing the silver price, then they won't be pushing the gold price. So because it was a different set of people.
Crooks.
Well, yeah, exactly. But it was a different set of people pushing the silver price. So there wasn't going to be that marriage between the two of them.
Okay, got it.
Yeah,
that's a good point. Yeah.
Yeah.
I want to ask you, did you notice lately that your MT4 prices on the data, the terminal, is slightly different to the chart? The chart goes up, but the price on the, I don't know if it's just not catching up because the market is slow catching up with the price, or it's just something going on now. When I look at the prices of what's on the chart's going up rapidly, but the price on the terminal is not following suit.
Oh, okay.
I don't know if you noticed it.
Yeah, I actually did notice that the other day.
Oh, you did? Great. Okay. What's going on, Jeff?
I can't remember what broker I was on. So it may be broker specific, Helen. I don't know, to be honest.
Are you on Fusion as well?
I'm on a few. Fusion is one. And that's why I say I'm not sure which broker I was on at the time.
I've just been noticing on the one that we have, that's Fusion.
Okay, all right. I'll keep an eye on that.
So when you close the trade, you think you're making more, and actually it didn't follow suit.
Oh, that's interesting. Okay, well, do you know what, Helen? I would suggest you email them at Fusion for that, because they shouldn't be able to get away with that. That's a bit like, somebody, you go into a retail store and they've priced something on the shelf at one thing, and you go there and it's a different price. So I would, I'm on Fusion, but it's okay. Okay, if it happens again,
a few times and some pairs and.
That's enough,
but happening more often.
Yeah, that's enough.
Look, I've been in a war with brokers for 20 years, not 20 years, 15 years nearly. And I've never won a battle yet, Helen, to be honest.
But it's worth noting it. I think Fusion, the guys at Fusion are fairly above board. But
Phil's a nice guy. There's no question.
Yeah, he's very good, and he answers you right away. I don't know. I mean, I don't know why it's happening. It could be just the volatility of the market. It doesn't catch up so fast, or that internet connection. I mean, you can blame a million things, couldn't you?
Yeah, you could.
You
you're
could,
right.
but you need to know the answer.
Yeah,
Yeah,
you do.
So
true.
you can adjust
Well,
to the.
Jeff, would you do the honors?
I'll do the honors for you. And it's fusion, right?
Okay, well, we'll get back to you on that then. So we've got about 5 minutes left here, 6 minutes left. Jeff, I don't
Thanks.
know if you've got anything. No, you are welcome, Helen. Thanks so much for coming on as well on mic, because
Thanks.
this is what this is about, isn't it? We want to get on mic and have a chat.
Yeah, it's cool.
Yeah, so it's just get you back on mic, Jeff. Anything you need to do before we leave?
Yeah, lament one, really.
Yeah, okay, and we'll talk about oil as well, because Roy is asking
All
about
right.
that. Yeah, you go first, mate.
Very quickly, Euro Aussie was one of my pets today. I didn't mention it before because it's already gone, but and I don't think there's an opportunity to get back in. That's the problem. Or did I talk about this? I don't know if I talked about this. I talk about so many things in the day, and it should have been in your what do they call that thing? Telegram today. If you're not a member of that Telegram group, guys, become a member of that Telegram group. It's below you there somewhere, the link to it. I analyzed this earlier and saw that we had double bottom, almost an inverted head and shoulders. Interesting scenario, actually.
I've got the screen, mate, but I'll bring it on mine, shall I?
Oh, hang on, I'll just pick it.
Yeah, you go for
Does
it.
that change it? Right.
Yep.
Okay, so we had this double bottom, almost an inverted head and shoulders. If either way, it doesn't matter. We had a neckline here, and the neckline was broken and retested. That's a massive buy signal for me right there. But it failed to take out the high, which alarm bells start to ring when that happens. And then we put in a lower low, a lower high, and then another lower low, and we got the pull back to the daily pivot. Then we got a dominant break. Now, slingshot traders, if you're watching this, you will have noticed that there is a dominant break of that trade line. That's called the dominated trade, and we should have been in that. I'm not, sadly, I'm not. I don't know why I'm not. I'm just not probably timing in front of the charts. But that's been missed. But I want you to take notice of exactly what I just said. Right, we had a reversal pattern that failed, in my humble opinion, failed. We had the breakout, but it failed to go on with the job. Neckline break, retest, that should have put in a new high. And the minute it doesn't, something else is happening. And I think that something else is playing out now on Euro Aussie. Aussie dollar, you know about dollar yen. I want to have a look at dollar yen, wherever it is, somewhere here. As you know, we're in dollar yen, and we're in dollar yen long and have been for quite some time. Look, I'm going down the history road now, and we've got 1, 2, 3, 4, 5, 6. This is the 7th day of buying on dollar yen. You've got to go back. A good old Australian expression is a month of Sundays to find the last time that we had 7 days in a row of dollar yen rallying. So I'll leave you to do that exercise. Go back and find out how long it's been since that happened, and then come back and tell me that it's going to keep going without a retracement. Sorry, I'm not suggesting that it can't go higher for 1 second. What I am suggesting is that we're getting very, very close to a retracement. Maybe today's the day, maybe it isn't. Maybe this is a fake break. I don't know. But just be aware of that and things like that. When you see, actually, I'll go back to that chart. You can see here we've got a double pump on that trend line before we break through it. I'm absolutely confident that we'll get a pullback to that trend line at some stage. Is today the day? Maybe it is, maybe it isn't. Just look for a setup, that's all. And if the setup comes, which may be double top, bearish engulfing bar, something like that on a smaller time frame, that would be my counsel. Wait for it. If you're long like we are, you've got nothing to worry about, because I see this only as a retracement back to here. But I think it's a play if you can actually find that. If you don't like trading counter trend, forget it. It's not going to happen. Updating the trades that we're in. EuroCAD. EuroCAD is actually, it's not on that chart, is it? EuroCAD. Where's our TP1? 152.05. I think we've only got about 200 pips to go. Only 100 pips to go. But this was always going to be a long-term trade, guys. We're back in profit, and just keep your eye on that one before the weekend. If you can possibly get a little bit closer to that TP1, take it. I would suggest. Pound CAD. We're also in pound CAD. Where is that? There. That's looking particularly strong now. We're looking really, really cool on that. Where's our TP2? I haven't got a TP2 on the chart here. Look, I'm going to leave that up to your own discretion. But I think this has got legs now. I really do think this has got legs. Expect a retracement of some kind. But as I said from the outset, I reckon this can go down to here, around to the 168s. So there's a whole bunch of pips available for us there if you can hang on. I'm not going to do anything at the moment. I think TP2 is probably down here around about 172, and that's where I'll take it. You can see that level across there. About there. So let's call it 172. That'll be TP2. You can do what you want there, take some money off the table, or move your stop loss down to entry. I'll probably do both, but my ultimate target's down here in the 168s. The last one that we're in, EuroCAD, dollar yen, we just spoke about. That's it. 3 still going and going strong. So I'm going to
pound AUD, fly on down.
Sorry, mate. Go again.
What was that you said, Helen? Sorry.
Oh, sorry. I was talking to my MT4. All the pound pairs are flying down.
Oh yeah. I
was waiting for them for the news, but they're preempting the news.
Yeah. They are.
That means we just got TP1, right? We've been through TP1.
You probably did.
We need more than that to make up for the week, guys. I've got to go.
That. Yeah, we got to go. So sorry, time has been our enemy today. Lewis, the euro yen, we'll have to look at that next week, and also Roy will look at oil next week. The doubt is going to move too much right now, but I do apologise. But Jeff and I do have to be somewhere, so we will speak. Weekend. Thank you, Helen. Thanks for coming on too. Thank you, John. See you next week, buddy. Have a great weekend, everyone. Stay safe in the markets, and we'll see you on Monday.
Thanks for the week, guys. Bye.